Are you curious about how to generate passive income through investing? Welcome to Entrepreneurial Edge. Don't forget to like this video and subscribe to our channel for more insights. Dividend stocks are like the gift that keeps on giving. They provide a steady stream of income, much like a reliable paycheck. When you buy a dividend stock, you're buying a piece of a company that shares its profits with you. This means you become a part owner of the business. These payouts are called dividends, and they're typically paid out in cash directly to shareholders. Sometimes they can also be in the form of additional shares. Think of it like owning a rental property. You invest in the property and expect returns. You receive rent payments from your tenants, right? This is a regular source of income. Dividends are similar. They're like getting rent on your ownership in the company. It's a reward for your investment. Dividends are a fantastic way for investors, especially beginners, to generate passive income. They offer a sense of financial security. Instead of just waiting for your stock's price to go up, you're getting paid regularly just for holding on to it. This can be a great strategy for long-term wealth building. Now that's a sweet deal. It's like having your cake and eating it too. The mechanics of dividends. How do they work? Let's dive into the details. Companies that are profitable and shareholder-friendly often decide to distribute a portion of their earnings to investors. This is a way to reward shareholders for their investment and loyalty. This distribution is what we call a dividend. It's essentially a share of the company's profits given back to the investors. The decision to pay, how much to pay, and when to pay is made by the company's board of directors. They carefully consider the company's financial health and future growth prospects. There are two main ways you'll see dividends paid out: cash dividends and stock dividends. Each has its own benefits and implications for investors. Cash dividends, as the name suggests, are paid out in cold, hard cash. This is a direct payment to the shareholders. It's the most common type of dividend. Investors often prefer cash dividends for their immediate liquidity. Stock dividends, on the other hand, pay you with additional shares of the company's stock. This can be beneficial for long-term growth. Now, when a company announces a dividend, it sets a specific date called the ex-dividend date. This date is crucial for determining who is eligible to receive the dividend. To receive the dividend, you need to own the stock before this date. If you purchase the stock on or after the ex-dividend date, you won't be eligible for the upcoming dividend. After the ex-dividend date, there's a payment date when the dividend is actually deposited into your brokerage account. This is the day you receive your share of the company's profits. The allure of dividends benefits for beginners. There are many reasons why dividend stocks are particularly attractive for those just starting their investment journey. First off, they provide a steady stream of income. This regular cash flow can be reinvested to buy more shares, a strategy known as dividend reinvestment, which can really accelerate your wealth building over time. Secondly, dividend stocks can offer a cushion during market downturns. Even when stock prices are fluctuating, those dividend payments can provide some stability and peace of mind. Lastly, focusing on dividend-paying companies can instill a sense of discipline in your investment approach. These companies are often well-established with a history of profitability, encouraging a long-term investment horizon. Dividend superstars, examples of popular stocks. Let's put some familiar names to the concept of dividend stocks. Companies like Coca-Cola, Johnson & Johnson, and Procter Gamble are renowned for their consistent dividend payments. These companies have a long history of paying and increasing dividends year after year. These companies have strong brands, solid financials, and operate in industries that are relatively resistant to economic downturns. This makes them attractive to income-seeking investors who prioritize stability and consistent payouts. Taking the plunge, starting your dividend journey. This is where your path to financial growth and stability begins. Getting started with dividend investing is easier than you might think. It's a journey that can be both rewarding and educational. You'll need to open a brokerage account if you don't already have one. This is your gateway to the stock market. There are many reputable online brokerage platforms that make it simple and affordable to buy and sell stocks. Choose one that fits your needs and offers good customer support. Once your account is set up, you can start researching and selecting dividend stocks that align with your investment goals and risk tolerance. Remember, diversification is key. It helps in managing risks and maximizing returns. Don't put all your eggs in one basket. Instead, spread your investments across different companies and industries. This strategy can protect your portfolio from market volatility. Before you hit the buy button, make sure to thoroughly research the companies you're considering. Knowledge is power in the world of investing. Look at their dividend history, financial health, and future prospects. These factors will give you a clearer picture of the company's stability. A company's past dividend performance is not always indicative of future results, so it's vital to assess their current financial strength and future earnings potential. This will help you make informed decisions. Understand the company's business model, competitive landscape, and any potential risks that could impact its ability to pay dividends consistently. This comprehensive approach will set you on the right path to successful dividend investing. Thank you for watching. If you found this video helpful, please give it a thumbs up and subscribe to Entrepreneurial Edge for more insightful content. Happy investing!